Hello, everybody. It's Bob Anderson, and I want to do a video, old school style, with the camera and the board, because this is a topic that I don't necessarily need to look at charts or anything like that. What I want to talk about is something that happened to me over the holiday season. I had to go to an event or whatever you want to call it, and you know, what happens at events, you meet people, you start talking to each other, blah, blah, blah. And I came across this guy who is semi-retired, I guess. Anyways, long story short, he trades for a living. And so, of course, I said, well, I trade too. And he says, oh, really? And, traders, it's a lonely business. Trading is a lonely business. There's not much community in it because you're on your own and you're making your decisions on your own. And you're doing everything that kind of fits your needs or whatever. But anyways, he was talking about how he trades ETFs and he trades options. Okay. So, we kind of went over some of that and, what his style is and stuff like that. And I told him I trade futures. Anyways, the point of this video is to talk about the fact that I realized over all these years of, me dabbling in and out of trading all the way since the dot-com days, when I first really sat down in front of a computer and took a trade, which back in the dot-com days, you just had to buy something and you made money. It was real simple. Oh, wow, this is great. You just had to buy anything and you made money. So of course, that's that false sense that, oh my God, this is easy. Fast forward to, 22 years later, it's not easy. But what I have done is I've evolved because I used to trade some ETFs. Seriously, I traded ETFs too. Matter of fact, my mother day trades ETFs. She does. She's been day trading ETFs for, God, I'd say at least 15 years. But anyways, I used to trade ETFs. But again, I don't do that anymore or whatever because I had to find ultimately something that fit my personality. And so he and I got into that deep conversation later because he asked me why was I trading futures and not options or not ETFs anymore and whatnot. And I basically told him I gravitated towards something that ultimately fit my personality. And so I got into explaining that, and basically my person. I'm a very impatient person, and when I go into a trade, I don't care if it's one contract or three contracts, whatever it is. I have a moment of anxiety. I have anxiety. I mean, I can be up $500 for a day and take a one contract trade that's going to cost me maybe $100, and I still feel anxiety. And I explained that to him. I said, I just can't mentally get over that I buy some options or sell them or whatever. I mean, and they're going to be gone in a week or whatever, and I've got to hold them. And I mean, even though my 401k has money that I just threw it away and don't think about it and don't even look at it type thing. The reality of it is when I day trade or I trade, I can't trade mentally the style where, like, for example, let's use an example. Let's say some styles are like this. They look for zones. They look for a supply zone, say up in here, and they look for a buy zone, say down in here. And so, they're conceptually looking for, price to, let's just say come into a zone like right in here, and they'll look to accumulate here so that they're looking to sell here. Okay. I mean, I'm sure some of you have seen that form of trading before. And there's always let me go further in this. And there's always a zone. This is the zone. This is the sell zone, and this is the supply zone. Because there's no science to it. There's just, every time price seems to come down here, the people buy, and we see it goes up here as people sell or whatever. Anyways, the point of me talking about this is the anxiety that I feel when I place an order right here, let's just say, and I'm waiting for price to, hopefully find its way to here so that I can sell it. But I don't know when it goes back through here, like how far am I supposed to let it go before I call the trade, no good, or, because, this box, this zone isn't perfect. It's just kind of the general area, because, price can go back inside this, zone or whatever, and then it could do that or whatever. So kind of like, for those of you that have any experience fib trading, oh my God, I tried that for a while, and this kind of reminds me of fib trading. Oh, it looks like the buy zone's the 50% level, so you're accumulating at the 50% level, and then price goes through the 50% level. Oh no, it's really the 66.67 level. Oh well, okay, you accumulating there. I mean, at what point do you get out? At what point are you that you're accumulating a negative balance in your trade? Do you finally just cut it and call it a day? Only to cut it and call it a day when it goes through the 66.67 level. Then when it gets down to the 73 level or whatever, then it reverses and goes up and makes you look like a fool. My point is that all these styles of trading and all these instruments of trading, from options to ETFs to stocks to whatever, the anxiety was even worse for me because this could be an hour or so, and then before it even starts heading that way, and it may meander through here and then maybe head up here at the end of the day or whatever. And I mentally and emotionally am not capable of taking that swing. I'm just talking about me personally, okay? This doesn't have to be you. I'm just talking about me. So when I told this person, well, I trade futures, I really realized it's not just that I trade futures. It's that I found that the price of futures and the leverage of the contracts allows me to get in and get out relatively quick for a decent amount of return, as long as now this is all me figuring this out after the fact, okay? This is all part of the journey, figuring out after the fact that when I did this with a narrowing window, hopefully, for my anxiety. So, what do I mean by anxiety versus say this? Well, I'm not discrediting that this type of trading doesn't work, because it does. Or stock traders that wait for, daily price to settle on a 50-day moving average and then, inside bar and then taking a trade out the top of the inside bar the next day, that kind of stuff. I'm not discrediting that those styles of trading don't work, because they do. They don't fit my personality. I'm just not that focused. I'm just not that patient either. And so, if you look at this style here that I'm talking about, it doesn't fit my personality. My trading, I look to trade off of a specific pattern, multiple patterns, but a specific pattern that when I enter, I'm either at break even or just a little settlement of price, and then an accumulation, and then into profit, or I'm done with the trade. And so I want to be in profit in my trade relatively quick from when I enter, so that the anxiety actually suppresses a little. It's the mental side of trading that I've always struggled with, and I've talked openly about on this channel. And it's the thing that I've still to this day struggle with. I just struggle with it. And I think every one of us struggles with something. We either struggle with being able to see patterns, or being able to feel confident at what we're doing, or being able to one I used to struggle with, or being willing to accept failure in the trade instead of trying to, do hopium that the trade works for you. If you accept failure in the trade faster, the more likely you're going to survive. When a trade is no good, a trade is no good, at least in my style of trading. So let's talk about my style of trading, the one that I talk about in this channel, the one that I found works for my impatient, anxiety-driven personality that I have when I trade. So, I've talked about moving averages, and lately, because we haven't gotten into the market moving a lot, I've been trading two primary trades, which is the 5-minute a trade I call the 5-minute red line, and a trade I call the overnight open. So I'm going to use a red line for the point of this one. So let's just say this is the 5-minute red line, which is a 5-minute 21 SMA. Okay, so what do I mean by anxiety? Well, what I'm talking about is, so price comes up through, let's just say, through the SMA, and then comes back to the SMA, and then pierces that SMA right there. Okay, my trading strategy is to recognize patterns where, in general, we're seeing new to recent highs. We're trading in the direction of the market, the new recent highs, and then the pullback normally means that price is now seeking, some relief from the push, and then looking for some support to reverse and then clear the push to a new level. That's normally what price likes to do. It's like waves. They like to just continue waves. So if you're looking for waves and you've created what's considered like a newly recent high or whatever, and you got your SMA coming along, which is my most strongest SMA on my chart, and then price, the candle forms here, and then price goes this way. Okay, when you enter on the break of that 1 minute candle, let's say to the long side, what I am looking for is, I'm looking for a small candle here, so that my risk, I'm hoping for a smaller candle there, so that my stop isn't too far, is hopefully even below that candle, because that candle becomes like support itself. Because once it breaks to the long side, what should happen is price should go, and it should continue at least to that level, if not more above. Okay, but how does this fit my personality? Well, it fits my personality because this reaction of the breaking of the top of that candle is supposed to be, if you have a relatively smooth direction back to this moving average, you haven't broken this moving average, recently, meaning it hasn't been hit by price action a lot. So it's got a virgin feel to it. It's going to have built up energy at it. Then when this breaks, it should push price so that you can walk your your stop loss close to, if not at a break even level. And when you do that, then the anxiety can go away. And that timeline from here to where I can get my break even to here in my world with my trading strategy should be within 2 to 3 minutes. So in my mind and that's on winning trades. In my mind, I should have anxiety release within about 2 to 3 minutes from the moment I enter that trade. And then I can watch, where the candles form, how they form, that kind of stuff towards whatever the targets are on the charts by looking to my left and seeing where future resistance areas are and stuff like that. So my point of this video is to just say that I think one thing that maybe some new traders haven't thought about is what kind of trading would fit your personality, because they may find that options is best for them, or something else, or the way you trade futures is more of a swing trading style, than I like to strike them quick and strike them fast and get out. If I can. I mean, that's what I like to do, and how my style is. I don't like to be in trades unless they're deeply into profit and my targets, and I can be aggressive about where my targets are, because my pivots, here, let me give you an example. So let's go back to this. Let's just say we had that situation with the 5S, with the 21 SMA, and let's just use the 1 minute gold line, which is my fast moving 9 EMA. So it's a 1 minute 9 EMA, and that thing's coming up. Okay, when you have that thing rolling up and price comes through, let's say creates like a new recent high, and then you got your pullback to the area. Okay, I'm going to do this best I can, and then you have your break where your candle breaks, where your price breaks that candle finally with the support of this 21 SMA. That's what you're looking for. What you'll find a lot of times, the candle opens, breaks, goes like this, let's just say, and I'm slowly working my way to break even, right? Okay, so here's what's interesting. When price runs away like this, well, let's say your target's way up here. Price runs away. One of the things that you find, I'm going to get rid of this for a second. One of the things that I find so often is price will reach a point, like let's just say, and this is so often, and this is one of the things I've worked on. Now that my anxiety is over because I'm at break even, how do I get that bigger target? How do I feel confident that bigger target's going to hit? Well, a couple things. One is that, say you have this big crossover and you created a new recent high and you come back to your 21 SMA. What you should expect in standard price action is that your candles are going to run, if they do run, they're going to run up to this area here, and they're going to feel a little resistance. Okay, they're just going to, because there's going to be a lot of sellers, for example, that entered here and are selling right there because they're looking at that as a pivot spot. But here's what's interesting. If you go back and look at your charts, when your 1 EMA is running up running up and trying to catch up to price. Okay, it's trying to catch up to price. Price has crossed over that 9 EMA. So often when it does do a subtle pullback from there, it does it right to that 9 EMA. Because that 9 EMA, forget the 21, say the 21's down here still, okay? That 9 EMA, and here's your stop. Your stop is still sitting, say, right here, okay? Because you got it at break even. And you're like, well, should I have taken profit? Well, when that 9 EMA comes up behind it, it has a tendency, price crossed over it, and now it's sitting on top of it. It becomes support. And so often you will see price sit on that 9 EMA, that all this space was there, and it had to catch up to price. And then it'll keep pushing it, and then your targets will ultimately be hit. If your targets are ones that are reasonable for how the market's been moving recently, which is what one of the things that my trading system has really helped me out with, is figuring out what realistic targets are lately, because of seasonality. But what the targets are lately, say for the RTY or NQ or GC or CL. But this last half right here was a piece of my trading style that I couldn't really allow to mature until I recognized that if I do just this to this, and I just be happy that I made $150, $200, whatever it is on that trade, versus recognizing that we've created this gap over the 1 minute gold line. The 1 minute gold line's coming. We've got that big crossover swing, boom. That bigger target is really it. And I've just got to let price now work in my favor to my target, because I'm trading at the right time of day. I'm looking at the right type of price action. I'm trading in the right direction of the market. Like in this case, the overnight open is way down here, so I'm trading on the north side of the overnight open. I'm trading long, which is on the north side of the 21 SMA. I'm going with the market. I've got everything going in my favor except my anxiety, which will cause me to pull out of trades too quick. And when I pull out of trades too quick, I leave 50% of the profit from the trade on the table minimum. And when I do that, it just means I have to double down my efforts to find another one that does the same setup later, which they don't happen all the time, just to make the money that I should have made when I took the trade in the first place. Or I have to multiply my contracts here, which puts more at risk here, from here to here, just to get the money. So this last half is the piece that I'm really been working on. But I've allowed myself to recognize that I've removed the anxiety once I'm there. Once I'm at break even, remove the anxiety. And that's what makes futures trading fit my personality. It's the style of trading, which is I'm looking for strong pivots off my moving averages where I take breaks in the direction of the price, and I'm anticipating it to go in my favor very quickly. If not, I get out. And that's what fits my personality, because I'm impatient. Yeah, that's what this video is about. This video is about maybe, for 2024, try to determine if you are trading a trading style that fits your personality, or trading instruments that fit your personality, if you truly want to have trading as part of your lifestyle or part of your, you know, supplement to your income, or even part of your actual, full-time income, is just to, if you have mental struggles like I do with trading, just see if maybe whatever you're doing, whatever style you're doing, whatever instrument you're doing, you're actually incorporating it with something that will ultimately help you deal with that shortcoming, the mental shortcoming that you have. Anyways, that's the point of this video. I don't know if I made much sense. It is something that I fully recognize in myself with the trading style that I've come up with, that I by default came up with this because it's what fits my impatient personality. And I am a very impatient person, and I don't like anxiety, especially when it's self-induced. I mean, when I take a trade, the anxiety is self-induced. I'm fortunate right now in my life that I don't have to trade. I mean, I own a business that's very successful. I don't have to trade. So when I create anxiety by trading, it has to be short, or I don't want the anxiety at all, because I don't look for anxiety in my life. Everybody have a good day. I'll talk to you later. Bye.